There it is. So we are officially recording, and welcome to session 2 of Health Insurance 101. As we mentioned, I am James from Castell Insurance. We have Stephanie on the line. She will be a key component when we get through the content and get to the Q&A. So hopefully you guys are watching this for one of two reasons. You are coming up on health insurance open enrollment. It's kind of that 6, 7, 8 weeks that you have to open enroll and choose your plan. Or you're just a sick, crazy person like us that loves to learn about insurance and you don't even need it. You're just looking at it for a kid, a neighbor, a friend, or you just want to see our faces. I doubt any of you are doing that. If you hear a dog barking or kids screaming, I apologize. I'm taking this from home. And like many of you, this may be the witching hour, getting ready for bed, just finished dinner. But we realize that doing classes at 1 p.m., not super conducive. So we are trying to find ways to meet the masses. I'm going to share my screen here. And as I've already promised, I've got my dog howling and barking to try to come in. So I have stepped away for a moment. And Griffey has joined us in the background. So if you see a Labradoodle walking around, we've got a dog live. So we're just going to jump into it. This is for the under 65 market. And we're going to, let me take a look so I get my full screen here. And we're just going to kind of jump in and go through, again, questions. This will be the most fun part, is actually getting to ask your questions that you have. And we'll go through. So drop them in the question line. Today's agenda, we are going to go over where you buy health insurance. In the past, it used to be, come to me. I am the keeper of all things insurance. Not so anymore. You can kind of avoid a broker if you wish. But we would caution you that there are pitfalls if you do that. We're going to go over eligibility. So who's eligible for under 65 insurance. And we're going to go over costs. Obviously, that's a big factor we talk about all the time. How can I get it more affordable? How much is it going to cost? What are my options? We're going to go over all those things. And then something that is near and dear to both my heart and Stephanie is going to be about why your carrier matters. Carrier is the insurance geek term for company. A lot of people think company. So think of like Regents, LifeWise, United Healthcare, Aetna, those are the carriers. And that is, I'll just keep it insurance geek approved, and we'll call them carriers because that's what they are. So let's get into it. As I mentioned in the past, you would usually go to a broker to buy insurance. And with the invention of the Affordable Care Act 7, 8 years ago, they had created something called a health exchange. It's kind of a one-stop shop, or almost like a flea market emporium. You kind of go online to one website, and that is the only place that you buy the policies. So all companies that want to sell insurance policies in Washington that are true, legit insurance are sold on this site. You'll notice the logo. We put it over a lot of our advertising. It's called the Washington Health Plan Finder. It'll be called the Exchange. It'll be called the Health Plan Finder. It'll be called Obamacare, ACA, all sorts of different monikers. But something that is really important about this, just for anyone that's first time on, a lot of you will recognize this as you have accounts. Go to the right site. We've seen a lot of times that there are some fake imposters that are just basically trying to proposition themselves as if they are the state's health exchange. And they're not. The one and only, the end of all roads should lead to wahealthplanfinder.org. And you should see this. I don't know. Stephanie, do you know what this logo is? Is it supposed to stand for anything?
I think it's supposed to be like a compass is the thought behind it originally, but I think it's been tweaked 3 or 4 times now in that 7 or 8 year period. So
we'll go with the compass. I like it. Give you the direction, right? So anyways, this is the one-stop shop. This website allows you to see what is offered, where you live. It allows you to see prices. It allows you to enter income information, which we will get to shortly. It just is your one-stop shop. So how to buy insurance, you go to this site. You can also access brokers through this site, like Castell Insurance, obviously selfish plug here. This is where you can link up with a broker and we can get access to your applications at no cost. So we're able to help guide you through each step all the way through buying and deciding plans at no additional cost to you. So seeing a broker does cost you $0 additional dollars. So again, driving that factor home, you get professional advice, counsel for nothing. Pretty cool these days to get something for nothing. Let's talk about eligibility. So this is really going to be where you're trying to figure out who can be buying, where should they be buying, and what should they be buying. This is going to be for those that are under 65. So that's key component number one. If you're over 65, we're talking Medicare, and I have other classes for you. So if that's you, kudos, you're probably in the wrong place. Drop your email in the chat function and I can send you our Medicare classes. So under 65, this is what has been deemed the Affordable Care Act. And you're really looking for really anyone under 65 that doesn't get health insurance provided by their employer or their spouse's employer. So maybe if you're on COBRA, recently retired, or you work for a small business that just doesn't offer health insurance, or you're self-employed and you don't have health insurance. The beautiful thing about the Affordable Care Act that was established, I'm going to guess, I think it was about 8 years ago. Stephanie, close to that?
Close to that.
We'll go with 8 years. I'm going to go with 8 years this whole class. So if I'm wrong, fact check me. I'd love to hear from you. Beautiful thing about the Affordable Care Act is it eliminated pre-existing condition clauses. So there are no rules and regulations against if you're a cancer survivor, if you're a diabetic, if you have any condition, they cannot turn you down. Obviously, this has impacted some of the costs and underwriting and the way policies work. But in regards of eligibility, everyone, which is an awesome thing. So cost and coverage obviously is a huge part of insurance, but who can buy it? Really anyone under 65 that needs health insurance can buy it. We'll get into really nitty gritty details about cost and eligibility. There are some really, I guess I would say complicated factors that go into how much it costs, but as long as you're on your own, you have no one looking out for you from the employer side of things, you're kind of in this market here. So one of the most common questions Stephanie and I and the team at Castell Insurance get asked, how much is it going to cost? And the simple answer that I can always say is, it depends. There are a lot of factors that go into deriving your insurance costs. So we'll go over some of the basics. First and foremost, you're going to be looking at household information. So who in the house are you buying insurance for? Obviously, a 60-year-old is going to cost different than a married couple that are 33 with 4 kids. Like the house makes a big difference. Your location makes a difference. So where you live changes the companies that you have that are offered, how much the policies cost. And then the complicated one, which we will spend another slide on, your income matters. So the Affordable Care Act, when it came out 8 years ago, as we're going to stick with on this presentation, the reason it's called affordable is there are some calculations that say if you make under a certain threshold of income, you will get some federal help to pay for your insurance. So that's where Affordable Care Act comes from. That first word is affordable, and it's talking about making health insurance affordable to the masses. So the lower your income is on an annual basis, the less you will pay for your health insurance, kind of a sliding scale. Some other factors about the actual insurance policies that will affect your cost are going to be the basic levels of the plans. So every company is required to offer, if the carrier is in your market and they're writing a policy, they're required to offer a bronze, silver, and gold plan. Good, better, best. For those of you that are sports fans, you'll totally understand the metallic. Gold is going to be the highest cost. Silver is going to be kind of the Goldilocks, not too hot, not too cold. And bronze will be the lowest cost plans. So that's going to help factor in how much you're paying for your coverage. And then some of this is obviously where Stephanie and I really love it. Went too fast there. Man, I really love the nerdy stuff. What affects your insurance costs are going to be the finite details. So not the cover of the book, but like flipping back to like page 7, 8, 9, the network, which is going to be where you can go, what hospitals, what providers, what doctors, your deductible. That's a common term. Most people that have car insurance understand it applies to your health insurance as well. Deductible and max out of pockets are big. And then just your overall benefits. You know, this is going to be copays. How much is it going to cost to get a prescription? How much will it cost to go to a specialist or like a chiropractor? You know, every plan has different embedded benefits. And all of those things are part of that kind of like nuanced conversation about what your policy is going to cost. There is no one size fits all. If there was, it would make Stephanie and I's life a lot easier and maybe expendable. But since things are complicated, that's what you have us for, right, Stephanie?
Exactly. Because there is no perfect plan. It's all about how you're going to use your insurance.
And it can be something as crazy as, where do you travel in the off season, or where do you have a specialist? So great conversations to have with your broker on a one-on-one. But again, we'll have Q&A, and I see a couple right here already tapped into the chat. So hopefully we'll get to those here briefly for you guys. We talked about affordable, and I'm going to drill home on that now and how that kind of works. So the term that you'll hear is tax credit. This is the government's, I don't know if it's newly coined as of 8 years ago, but it really came into play heavily with health insurance when the Affordable Care Act came out. This is how the government will help you afford your insurance based on your income. So again, sliding scale. When you go through the application process, you can choose to apply for help from the government, which we thoroughly encourage. Most people do qualify. And what you do is you enter your household information. So how many people are you buying the insurance for? How much money do you make? So that's a really hard number to guess. As we all know, most people's income fluctuates on a year-to-year basis. So this is an estimated income process. So you're going to be guessing how much your income will be for next year. And based on that, they will look at your location, how much you make, how many people you're buying for, and their computer spits out a number, which is your tax credit. And that number is used to help you afford your insurance. So I'm going to use some very round numbers for those of you who have not used this process before to help maybe like simplify. So don't quote me on this. These are just rough guesstimated numbers. If you're a family of 4, and so your mom, dad, 2 kids, we'll use my household as an example. And let's say that between the 2 incomes, you make $100,000. Well, they'll say, wait, that's a really good income, but you're paying for 4 people's insurance. You might need a little bit of help with that. So we're going to give you, let's say $300 a month to help you buy your insurance policy. I then get to use that $300 almost as an allowance to go to the open market, go to the exchange, and find out which policy works for me based on all those funny variables, the deductible, the network, the people, the this, that, and say, great, my insurance policy is going to cost $900. The federal government's giving me $300. So I'm on the hook for the other $600. I'm going to go over this in detail because this is a very key component to buying your health insurance. So bear with me, guys. This tax credit is what I like to consider more of like a conditional loan. The government has said, great, James, you told us that you're going to make $100,000 this year. So we're going to hold you to that. And we have given you a loan each month that you may have to pay back. It's not just a gift. It is conditional on how much money you make. So if I have a killer year or start a new business or go sell a bunch of cars or heck, go to the casino and hit a jackpot and my income goes above the 100,000, they may come and ask for some or all of that $300 tax credit back each month. Or if the world has a worldwide health pandemic and your job shut down for 6 months, maybe you make less income than you thought. So maybe the 100 grand goes to 30 grand overnight. And the federal government will help actually increase that tax allowance for you. So it's kind of like this convoluted, I'm going to guess what I'm going to make. They're going to guess what I deserve, but they will balance the books. So come your tax filing time the following year, they balance the books. They find out how much you made. Should you have been given more? Should you have been given less? They will help level the playing field at the end of the year. Stephanie, you're an expert. You've had far more conversations about this than I have. How did I do explaining that? Do you have any good tips or tricks or ways to help that hit home for anyone else that I might have missed?
No, I think you did a great job. I think the big one we see often in our area, because we have so much tourism-driven income, is we talk to a lot of people about how do I estimate my income when, maybe summer I make a lot and winter I don't make very much. So that's one of the advantages of working with us. We do this all day, every day, 365 days a year. And so we have a few tricks that we have kind of developed over the years to help people minimize those tax liabilities. Because let's face it, we all love the idea of a tax credit we hate the idea of tax liabilities.
You don't like paying Uncle Sam more money in April?
No way. I like it to come back to me.
So there are a lot of tips and tricks. And again, talking with your broker one-on-one, someone who's got a lot of advice and counsel. And again, we will always throw the disclaimer, Stephanie and I, no one on our team are certified tax preparers or accountants. We just know a lot about the process of tax credits. So when it comes to like income and sheltering and all that stuff, may help to have a professional, but we do know a lot about this subject. We'll move along to what definitely gives all insurance, really any sort of product or service, a bad rap: potential traps. So we're going to go over a couple of things that a lot of consumers may miss that don't seem like a big deal today when you're buying the policy, but could end up being a very big deal in March, April, May, when you start using these policies. With anything, if you buy on price alone, you oftentimes end up being disappointed. So as price is obviously a huge factor, usually makes up 70 to 80% of your decision, there are other things. With insurance, number one is going to be network. This is a big one that Stephanie knows like the back of her hand with our carriers. This is going to be who you can see where. You may have heard horror stories of people having a surgery, a procedure, going to a doctor, having an MRI done and something, and they find out they were out of network, and the costs can be extortionate. Sometimes there'll be partial coverage, sometimes no coverage. We've seen all sorts of weird stuff. So depending on where you travel, what specialists you have that you already know. Some people, like, they may not have any doctors that you plan on seeing, but if you have people for your routine care that you know you want to go see this cardiologist, or you need to go to Seattle Cancer Care, for example, or you know that if anything happens, I definitely want to stay within the Swedish network of doctors and hospitals, or vice versa. Maybe you only want to go to UW Medicine. These are big potential pitfalls of policies that if you have the wrong one and you go to the wrong place, costs can skyrocket. And oftentimes that's where people think that, it's just lack of education on the front end buying the policy, where they get caught with these back end surprises. Something else on the policy that a lot of people will fall in love with is their deductible. Deductibles are very important, but they're not the end of the road when it comes to health insurance. When you have a car accident, that is something everyone's somewhat familiar with. You have a flat deductible. I pay $500 for the accident, and my company pays the rest. With health insurance, it's not the same. So if you have let's say $500 deductible on your health insurance, that means I pay the first $500 of care, but the company then doesn't pay the rest. There is going to be a cost share of everything after my deductible until I hit my maximum out of pocket. So there are two big figures on your health insurance plan to pay attention to: deductible, but we really like to focus on the maximum out of pocket. Many plans on the open market, even if they have a lower deductible of $500, those are out there. You can have a $500 deductible plan. Their maximum out of pockets are usually still over $5,000. So it does not mean if you had major cancer treatment, surgeries, major health issues, it doesn't mean that your financial hemorrhaging stops at your deductible. You're wanting to know what your maximum out of pocket is. That is kind of the catastrophic coverage. What's my ceiling? So those are big numbers that we always focus on with our clients. And then the other one's going to be like copays. Specialist copays, ER copays. There's different plans that have different things. So if you are the type of person that has routine maintenance or routine visits to specialists frequently, that is going to be a big one you want to pay attention to. Most all plans, not all, but most plans have a nice low copay to go and see your primary care doctor. Not all plans have similar copays to go see a specialist. So that could leave you paying like $20 to go see your primary, but instead of like 20 or 40 to see a specialist, you might be on the hook for a couple hundred. So those are things that are always good to like really evaluate on kind of these traps and pitfalls of the plans. Stephanie, you've helped guide people through and avoid these pitfalls. Anything else that I didn't add on the slide since our last meeting that you might think is worth addressing here?
I think the other big one that comes into play is prescriptions. If you take an expensive medication, that kind of needs to be accounted for in the discussion of which plan fits best. It's kind of like that specialist copay. If it's something outside the norm that you are taking on a regular basis, tell us or tell your broker so they can make sure A, it's covered, and then B, give you a really clear idea of what you should expect the first time you go fill that prescription in January or February. We don't want you to have any surprises. Our goal is that you understand what you have and how it works. And nobody wants a surprise when they're standing in the pharmacy with 8 other people all trying to get their prescriptions at 5:30 after work, and all you want to do is go home.
That doesn't sound fun to you?
No, I don't think so.
I did have a comment here, so thanks for the commenter as we went through this. I promised not to read the chat, but I did there for a moment. Great comment about network. There's a lot of different, insurance can be full of all of these abbreviations or acronyms. There's HSA, PPO, EPO, HMO, you name it. There's a ton of stuff. Networks have a lot of different names for them. Most commonly on the open market, you're going to find PPOs, which are preferred provider organizations. And this just means that the companies, the carriers can contract with many, many doctors. And as long as the doctor agrees to bill, let's say Regents, then they can bill them. HMOs are not offered out here on the peninsula, but we do help folks that are not in Clallam County as well. These are going to be more like facility types. So historically in Western Washington, the name Group Health will ring true. You'll also know the name Kaiser Permanente. These are places that say, look, we own our own facility. The whole building's ours. So you come to us for basically everything. You walk in our giant facility and it's got primary care. It's got cardiologists. It's got dermatologists. You don't have to go all over town. These are all different network types that are very important to just kind of address and know what you want. We will move along to health savings account. This is a subject that is near and dear to my heart. Again, we are not tax experts and advisors, but we've certainly helped a lot of people. And with certain types of health insurance, there are some tax benefits that we do know enough about. Maybe to be dangerous, maybe to be helpful. That'll be up to you guys to decide. But this is a type of policy. If you have a higher income, that you may benefit from some tax deductions or tax savings, and you're also pretty healthy. So it kind of fits a certain demographic, but they can be a really powerful tool. I'm going to try, I could probably spend 30 minutes talking about this, but I'm going to try to do it in about 2 minutes. These policies, you have to have 2 parts to the equation. You have to purchase a high deductible health plan. So you'll see HDHP a lot of times. This means the policy, for all intent and purposes, is really pretty crummy. It's got a very high deductible and no copays, no great low cost for really anything. So prescriptions, doctor's visits, MRIs, x-rays, pretty much anything you'll pay full freight, and you'll be chipping away and building towards your deductible. So that's why it's really a good plan option for a lot of people that are maybe not going to use a ton of health services. If you purchase this high deductible health plan, you're essentially saying, look, I'm willing to bear the brunt on almost all my expenses. I just really want that catastrophic high level coverage. And so that is why the federal government has, and the IRS has given you this beautiful thing called a health savings account. What you're allowed to do is, if you're enrolled in one of these high deductible plans, you're allowed to contribute money into a special bank account. You can open them at a local or online provider, you name it. We do have advice for you that we can talk to you on a one-on-one basis. And you can put money. The IRS allows you to put a certain dollar amount. It's about $4,000, $3,500 per person, up to about $7,000. And again, these numbers are as of 2021. They all change. But you're allowed to put money into this special account. The benefit here is that that money is not taxed. So you do not pay income tax on that money. So if you're a married couple and you can put $7,000 into the account, that comes off of your taxable income. That's a benefit. Then you can turn around and use that special bank account to pay your bills. So if you have a doctor's visit that costs you $180, you can turn around and pay with that tax deducted health savings account. But the real magic kind of comes in is if you remain relatively healthy and you can build that balance over several years, you can actually save up for all those maximum expenses. You can build this and there's no use it or lose it. So that balance can grow over time and you can keep contributing year after year and saving on the taxes, watch this little nest egg grow. And that way, if little Billy falls off the play structure and breaks his leg, or, mom's gallbladder bursts and needs surgery, if you get a $6,000 max out of pocket, you're not going to be shocked. You're going to go, man, I prepared for this. I've saved over the last 5 years or whatever it is to get there. And you have funds ready to pay that emergency fund. These are really cool weapons that I really like in the financial playbook for folks that are maybe a little more well-established, wouldn't mind taking some of the risk, and ultimately would like some of the tax breaks. The other key caveat that I do love and is a really nerdy tip as you go through is if you build this account up over time, there's no limit. You could put $5,000 a year for a family and build, that those funds can grow. And then you can use them to pay your Medicare premiums tax-free. So there's a lot of benefits. Stephanie and I have talked to lots of people, lots of accountants. We know far too much about this. Like I said, probably enough to be dangerous, but it is a great option for folks who say, I'm pretty healthy. I just want something to make sure I don't go bankrupt. These are really good options to explore when you're looking on the health plan finder. Before you buy, these are some of the things you really want to be checking on. And we're basically drilling again on some of the traps. You got to confirm that your household and your income information is correct. That can have some real big surprises come, spring at filing time when you go to file your taxes if there was incorrect information there. Number 2, check on your providers in your network. There are functions online for all of these carriers. Stephanie and I know them like the back of our hand of how to search a doctor. So if you go to a special oncologist in Silverdale, we can help you with that. If you want to make sure that your provider in Port Angeles is there, we can help you with that. And then ultimately, just check with your broker. A lot of the time, Stephanie and I, it's a huge decision for you year in and year out. But because we do this on such a regular basis, it's second nature. We can look at the plans pretty quickly. We build a relationship with you and we get the gist of being able to help you in a quick fashion. Sometimes it takes 10 minutes, sometimes an hour. We can do everything in between to help you. But those are kind of the tips and tricks. And golly, I feel like I've talked a lot. So Stephanie, hopefully there's a couple of questions in here that I can bring my screen share off. I see a few people still have survived my diatribe here, and I'm going to add you to the spotlight and see the questions here. So
yeah, I see Joe asked about EPOs versus PPOs. So EPOs are what has become kind of the norm and super common nowadays. Exclusive provider organizations. They're not as broad as old-fashioned PPOs. Typically, you see a really traditional-looking PPO on a group plan. They're pretty rare to see a true PPO on an individual health plan anymore. So Regents, for your question, Joe, doesn't offer a PPO for the masses, only through their group plans. What you'd be looking at in Clallam County or Jefferson County is an EPO. Still a very good network, just not quite as broad as those PPOs.
Why do they have to make it so complicated, Stephanie? I swear it's just to keep you and I in work, to have a job security with all these different acronyms and abbreviations, don't you think?
Yeah, every year I feel like I spend about 3 or 4 days as plans come out trying to figure out what all the new acronyms mean, because they are notorious for throwing new ones at them and tweaking small things so they can change the acronym. So the network is changing, and it changes. There were changes that came down this morning to networks for one of the major carriers in our county. So it's constant.
And what drives some of those changes? Can you highlight just for kind of the novice in me? I'm going to ask for me selfishly. This is contracts with insurance companies agreeing with like a hospital to say, yeah, we'll accept your payment rate, or what does it will look like?
It's typically a contracting issue of the hospital and the medical system have to get the insurance company to agree on a set standard of fees. So basically they have a giant list of this is my dream, and the insurance company wants to pay them as little as possible. The hospital wants to get as much as possible, and they have to find a happy medium. Like all of us, everybody has a budget, so they come together. Invariably, one or two hospitals kind of fluctuate towards one or two carriers, so you get a line that way.
It's crazy to me, even having done this for years, that they can be making contractual changes and network changes literally during open enrollment. Like the fact that we're in the middle of it and they're coming out with different hospitals that are accepted is an amazing
and
thing.
They'll be making changes in March and April. I mean, truthfully, it's crazy.
Yeah. So this is a great comment from one of our viewers about COBRA. Stephanie, would you mind educating anyone that's watching this on our YouTube channel that's made it all the way through the first 30 minutes here, what COBRA is, how much it costs, and just kind of the COBRA 101?
Okay. So COBRA, and I'm going to preface this in a non-COVID pandemic year. I will answer these questions because COVID has obviously thrown everything. COBRA is a continuation of your group benefits once they expire because you retire, because you leave your job, because you are no longer eligible for straight employee benefits. The COBRA plans are typically the cost that you were paying plus what your employer was paying, but you get to maintain that exact same plan. So if you're on an amazing group plan with a $250 deductible that is not available on the open market, a lot of times people will keep that COBRA to utilize it as long as possible. COBRA can be very expensive because, like I said, you're now paying what you were paying as an employee plus the 60 to 75% your employer was paying for that. So COBRA can be cost prohibitive sometimes not, just depends on your individual situation. COBRA typically lasts 18 months. And so on day one of month 19, you have to have something else in place, and we can help you find that something else, and we can kind of balance what you loved about COBRA, but how you're really going to use your insurance. Because those COBRA plans aren't necessarily something that you're always going to find apple to apple to on the open market. Sometimes it might be apple to orange or apple to kiwi.
I always found it funny when we were expecting our children, how every time the ultrasound or anything happened or books, it was always the size of a fruit. It went from a kiwi to an apple to a grapefruit to a, it just like, it was always a fruit analogy because apparently that kids are fruit. So yeah, the COBRA one, that's what's always most eye-opening, I think, for folks that work, especially for big employers. A lot of like smaller employers, they have pretty basic benefit plans. And like you said, maybe they're paying 75% of the premium and you're paying 25. But what you find sometimes when people have these really robust plans that include dental and vision and all these amazing things and all this, you find out, man, my employer was dropping like $1,000 a month on me for all these benefits. If I want to keep it, I have to continue paying my 200 plus their 1,000. And obviously, as you will all learn, the older you get, the more these things cost. So being on COBRA in your 40s is a little less expensive than being on COBRA in your 60s. And a lot of the time, COBRA, the folks that we talk to, we're kind of like maneuvering that highway between work and retirement and Medicare. And so I think a simple answer is to retire no earlier than 63 and a half. Will make it a nice, easy transition. If you want to keep your coverage, you can keep it right on up to Medicare, right?
And I have seen many folks finagle that, but there's options. There's always options. And like we've talked about, it's just finding the plan that's going to fit how you use your insurance, because there is no perfect insurance plan out there.
Except for the ones that you help people pick, right?
Well, I mean, they're close, but I don't have any say over the plans. I just have to help you pick the one that works best for you.
Yeah, it is all education. And so I think that unless you had anything you thought that we missed, I know we have one more of these scheduled for later this week. I want to be kind and respectful to everyone that is still on. So thank you guys. If you do have questions, you can email either myself or Stephanie. It is very, very, very simple. James@castellinsurance.com. Stephanie@castellinsurance.com. You can find our website, find us on Facebook, find us. We're pretty easy to find if you know how to use the computer. And I hope at this point, if you're buying insurance and under 65, you know how to use a computer and you're here on Zoom or YouTube. So I'm going to bid you farewell, Stephanie. I'll get to see you because it is 7:00 our time. So I'll get to see you in just a short 13 hours back at the office. How does that sound?
That sounds great. Thank you,
All right, guys. Well, thanks so much. Thanks for participating. And thanks for making us that one-stop shop for health insurance. We look forward to it.
Have a great night.